What's up, everybody? It's Stas here. Welcome back to another video. As you guys read in the title of this video, I just wanted to go over for all you guys out there that are beginners, how to invest the first $1,000. How to invest your first $1,000. So let's say you've been working your job. Let's say you're working whatever kind of jobs you guys do, however you accumulate income, right? And let's say you've saved $500 to $1,000. You put that aside and you want to invest that in the stock market, right? I just want to tell you three different tips that you can take into account on how to invest this $500 to $1,000. What thought process have to go through your mind, how to research stocks, and pretty much I'm just trying to guide any beginners out there that are just lost. They have the money, they have $500, they have $1,000, they want to invest it, but they just don't know how. That's pretty much what I want to cover in this particular video. So I hope you guys enjoy. If you're new, make sure to drop a like, leave a comment, and subscribe. And let's just get right into the topic of the video, guys. So the first tip I would give to anybody out there is to understand what avenue you want to go down in terms of investing. Do you want to be a trader or do you want to be a long-term investor? Because these two things are very, very different. And I just wanted to clarify it for everybody out there, that's new to the stock market, that has not really done much research on this particular topic. So a trader is somebody that trades the short-term fluctuations of the market. So let's say if Apple drops 10% tomorrow, right? A trader would be somebody that would, buy and pick up shares of that stock, hold it for a couple of days, a couple of weeks for it to recover, and then sell off the profits of that particular stock if it were to go up in price, right? That's what a trader would do. A long-term investor, it's kind of similar in terms of, okay, long-term investors buy the dips because when a stock goes down in price in the short term, that's good for a long-term investor that's long on that particular position. So let's use Apple again for an example. So let's say if Apple goes down 10% tomorrow, if I'm an investor and I believe in Apple long-term, I would pick up shares of that particular company at that discounted price so I can build up my position on that company for the long term, right? So that's what a long-term investor would be doing in that particular situation. Pretty much, guys, just determine whether you're going to be trading in the stock market, long-term investing in the stock market, or if you're going to be doing a mixture of the two, which is what I personally do and what I recommend to everybody out there that's starting. So if you have $1,000, right, you can put $500 towards a couple of blue chip stocks that you see long-term potential for, a couple of growth companies like Apple, Netflix, Google, Amazon, companies like this that you see a bright future for that have shown a ton of growth in the past. And you can put the other $500 into swing trade investments like I show on my particular channel, trading inverse ETFs, trading the short-term fluctuations of stocks and things of that nature, guys. So that's pretty much tip number one. Identify your avenue. Identify what you're going to be wanting to do with that particular money that you saved up. So my second tip to you guys is to understand metrics and to understand a company's numbers. When you're evaluating a stock and you want to understand the value of that particular stock, there's different metrics that you can take in order to do this sort of thing, right? If you want to evaluate a company's value, the price to earnings ratio is something that I highly recommend everybody out there to pay close attention to and to use in order to, evaluate a company. So if you're looking at the price to earnings ratio, this particular ratio compares the stock's current price, right? So let's say Apple's at $160. We can use Apple as an example here. You take their price of the shares that they're currently at and you divide it by their earnings per share. So if their earnings per share is, let's say, 7 or 5, you take the 160 divided by that, and that'll give you their price per earnings. And this is what you can use to evaluate whether or not a stock is at a cheap buy point. Because if the price per earnings is too high, that means you're paying way too much for that particular stock for how much earnings that they're bringing into the table, right? So that's what you want to keep a close eye on in terms of metrics. Also, earnings per share is very, very important, as well as dividend yield. If you guys want to invest in a stock that pays you dividends, and what this pretty much is leftover cash at the end of the quarter that a company has, whether they, They make profits, right? Whether they want to give it to the investors, the people that own the shares in terms of dividends, they can do that, which is quarterly, or they have the option to reinvest it into the business, R&D, or maybe even just buy back their own shares. So those are the three different metrics that you can use, and also looking at revenues, profits, debts, operating expenses, cash flow, things like these numbers are very, very, very important as well. And you want to see if a stock is growing over time in terms of revenues, in terms of profits. And you can do these different things on like Yahoo Finance, your broker, whether it's Fidelity, TD Ameritrade. I personally have Fidelity. I'm kind of biased to that particular brokerage. But that's pretty much what you can do to evaluate a stock on whether it's a good buy at this particular point in terms of the numbers and in terms of the metrics. So my third and final tip for you guys is to diversify your portfolio. If you have $1,000, you do not want to put all of that money into one stock. You've heard the saying before that you don't want to put all of your eggs into one basket. This applies to this particular situation. An example that I can think about for this is if you only have one income source, let's say you work a job and you get $50K a year. If you get fired and you don't have savings, you're pretty much screwed. You don't have any other sources of income. That's the same thing with this particular situation. If you put all your stock or all your money in one stock and that stock goes down 50 to 60%, you're losing $500, $600 on that $1,000 investment. So what I recommend everybody out there to do is to diversify amongst 3 to 4 stocks if you're doing long-term investing with $1,000. Or if you want to do trading and long-term investing like I personally do, you can split it like, okay, you can put $300 towards trading because trading is a little bit more risky, and you could put $700 if you want to put into long-term investments. Let's say you want to put $700 diversified amongst 3 different stocks, right? You can put about, like, what's that, $250, $230 into each stock, and then have that be your portfolio. $700 in 3 large cap stocks, 3 stocks that are diversified, and then you can use the other $300 in order to trade. So why it is very, very important to diversify is because it allows you to mitigate your risk. Like I said earlier, not having all your eggs in one basket is a very, very good thing, because let's say if one stock goes down out of the $700, the 3 stocks you own, one of them goes down in price, the other 2 don't go down in price. That means you don't lose as much money as you would have if you had all that money in the one stock. You see what I'm saying, guys? Diversification, very, 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 very important. Maybe the most important thing in terms of having a successful portfolio over the long term. So I hope everybody out there enjoyed the video. If you did, make sure to smash that like button, leave a comment, and subscribe. If you guys also want to follow me on Instagram, there's a link down below in my description, and I post all of my profits that I make from the stock market on my story on that Instagram. I also post any updates about my life, personal life, entrepreneurial ventures, my YouTube channel. Everything is on that Instagram. I'm trying to kind of, integrate these 2 communities of YouTube and Instagram and try to expand my community, our community, onto the 2 platforms. So again, hope you guys found value in this particular video. Let's make some money today. Hope everybody out there is killing their goals, killing all their aspirations. Let's get it, guys. Let's make some money today.